Welcome to the Fragility Forum 2022 podcast series produced by the Fragility, Conflict and Violence Group of the World Bank Group. As complexity and uncertainty become the new normal, with complex crises posing new challenges, from the COVID-19 pandemic to climate change, this podcast series explores how the international community can best support countries affected by fragility, conflict and violence in a fast-changing global landscape.
Hello everyone, and welcome to this podcast on the importance of the financial sector as part of the #Fragility Forum 2022. My name is Evie Calcutt, and I'm a financial sector specialist within the World Bank Group and part of the World Bank's disaster risk financing and insurance programme. In this podcast, we will be speaking about the importance of robust financial sector institutions, markets, and infrastructure, and how this can be a real key driver for resilience, stability, and financial inclusion in fragile and conflict-affected countries and situations. We'll also hear on some specific examples to back this up and to highlight how getting results can take time and requires strong collaboration amongst key stakeholders, including the private sector, to help ensure the results are sustainable. Today's podcast will centre around three discussion areas, which will take us along the financial sector development journey. Starting with the initial diagnostic phase, where we can actually assess a country's financial sector, moving towards implementation, and we will hear some examples of how to deliver digital financial services to the most vulnerable in fragile and conflict-affected situations. To begin with, I will be speaking to Cédric Mousset, a lead financial sector specialist with the World Bank Group. Cédric will discuss the role of financial sector development assessment tools, and in particular, the Financial Sector Assessment Programme, or FSAPs. Secondly, we have the pleasure of hearing from partners working alongside the World Bank to increase the resilience of pastoralists in the Horn of Africa. This is one of the most resource-scarce and drought and conflict-affected regions in the world. And this work is part of a regional project under preparation in Djibouti, Ethiopia, Kenya, and Somalia. And it's called the Horn of Africa De-risking, Inclusion and Value Enhancement of Pastoral Economies Project, or more simply, DRIVE. As part of that, I'm going to talk to Duncan Kalai, the Regional Advisor on Climate Risk Transfer for WFP's East and Central Africa Office. Duncan will tell us about their work on index insurance and financial inclusion in Ethiopia, and how WFP plans to work alongside DRIVE to scale up the support more broadly. And then we'll also hear from Benjamin Kamanga. Benjamin is the Finance Director at ZEPRI PTA Reinsurance Company, and he will explain to us why it's so important to take a regional approach when managing these financial sector risks, such as climate risks, and how the private sector can play a key role in delivering those services. Then to close the podcast, we'll hear from Karol Kaplinski. Karol is a financial sector specialist with the World Bank, and he'll talk to how we can streamline direct cash transfers to the most vulnerable populations. And he'll talk about the challenges and opportunities of using digital payments in such fragile and conflict-affected settings. Hi, Cédric. Great to hear from you about why financial sector diagnostics are critical in fragile and conflict-affected settings. And it would be great to get a sense of where these FSAPs have been completed and what can be done in the case that an FSAP can't be conducted.
Thank you very much, Evie. It's a pleasure to be with you. My name is Cédric Mousset, and I've been working in the Financial Stability and Integrity Unit for the past 5 years. Let me try to answer your question. I mean, as we all know, financial sectors are essential to the functioning of an economy, and unfortunately are often dysfunctional in FCVs. To effectively address the most pressing constraints, it is essential to have a clear and independent diagnostics. Joint IMF, World Bank financial sector assessment programs, so-called FSAPs, are a preferred option to do so. FSAPs are a flagship program which we run jointly with the IMF in emerging market and developing economies. The program was introduced in the late 1990s and covers both financial stability, financial development, and compliance with international standards. With regard to FCVs, the World Bank Board discussed the importance of FSAPs back in 2014 and asks that FSAP coverage is improved in FCVs. Efforts have since allowed improvements, with more than half FCVs already covered by FSAPs, and many more if we include regional FSAPs, which cover multiple countries. New approaches are now implemented to better respond to the needs of FCVs in cases where joint FSAPs cannot be prioritized. First, World Bank-led development modules are increasingly used. One was just completed in Iraq, and two are ongoing in the Gambia and Sierra Leone. Second, other financial sector diagnostics have also been conducted, for instance, in Afghanistan, in West Bank and Gaza, in Libya, and many other FCVs. The World Bank Board reiterated in 2021 its expectation for continued progress in this area. This is also a priority under IDA 20. World Bank staff is mobilized to achieve such goals. Thank you.
Thanks, Cedric. That was great. Really interesting. And so maybe you could tell us a little bit about how the recommendations from these diagnostics are actually advancing financial stability, development, and compliance in these fragile and conflict-affected settings.
Indeed, FSAPs in FCVs and other financial sector diagnostics allow the design and the implementation of broader and better structured operations and TA programs immediately after their completion, and obviously also over the medium term. For instance, the implementation of the recommendation of the first FSAP in the DRC in 2014 was immediately followed up first by a World Bank financial infrastructure and markets project, providing the financing to modernize payments infrastructure and increase availability of MSME finance. Second, by a series of technical assistance activities to address the most pressing and challenging gaps, including on financial stability. The analysis and recommendations of FSAPs and other financial sector diagnostics in FCVs also often greatly facilitate donor coordination by establishing a clear diagnostic and priorities. Obviously, impact is improved where FSAP documents are disclosed, which is always strongly encouraged as FSAPs are meant to be a public good.
In the middle part of this podcast, we're going to talk about an example of how access to financial services can really strengthen the climate resilience of communities in these fragile and conflict-affected settings. And in particular, we're going to focus on pastoral communities in the Horn of Africa, where there's a new World Bank project under preparation, and we're working with a number of stakeholders to deliver. Now, typically, pastoralists in this region have to manage a number of risks, most notably drought. And they manage this through mobility and increasing their herd size. But this puts a lot of pressure on scarce resources and can lead to potential conflict outbreaks. And in the end, they tend to hold on to their livestock for too long and eventually have to sell for a low price. And even in good years, they are extracting very low value from trade. But there is an opportunity to build on the strong regional cooperation created under the Horn of Africa initiative and the broader agenda for financial resilience in the region. So under preparation is a regional project called the Horn of Africa Drive project, which I mentioned earlier, in Djibouti, Ethiopia, Kenya, and Somalia. And the objective of this project is to build the resilience of pastoralists against climate shocks through an integrated approach and to help pastoralists invest to improve the productivity of their livestock. There are two components to this project. The first will provide enhanced access to a package of financial services. And we know that no single financial instrument can protect against all risks or all sizes of risk. And therefore, this package will incentivize savings to manage moderate shocks through risk reduction and financial protection, and insurance to back those savings for the more severe shocks. And the second component is to make sure that they're better linked to markets and to facilitate the trade of livestock and livestock products. Now, this project expects to close the protection gap of pastoralists and to reduce the financial exposure of governments in the drought years. And it will do so by leveraging and investing in the private sector to deliver a sustainable response. The target beneficiaries will be pastoralist groups that constituted around economic activities and have the potential to further engage in commercial activities. Implementation of this project draws on extensive lessons learned. Most notably, there will be a single regional implementer with the responsibility to deliver and engage with the private sector on that package of financial services. And shortly we'll hear from Benjamin Kamanga from ZEPRI, who is part of that regional implementer. Secondly, this project is commercially driven, and that's to improve the last mile delivery, with the financial and private sector playing a key role in making sure the services are delivered to the households. And thirdly, partnerships across the financial services and trade value chains are key. This project in preparation is actively engaged upstream with a broad range of partners. And most notably, we're going to hear from WFP today. And I think we're going to go to Duncan now to talk through the role that WFP have been playing. Duncan, it's great to have you here. Thanks for joining. So we're talking about HOA Drive and the potential that has. And in particular, it'd be good to hear about where the work in WFP has come from. And you've been working on this agenda for a number of years in Ethiopia. So please take a few minutes to tell us about what WFP has been doing in Ethiopia and how the Drive project can help you scale up your efforts. It'd be great if you could talk a little bit about the local partners you've been working with, the financial awareness and creation tools you've been using, and how the work you've been doing is improving economic empowerment of women. Thanks.
And thanks for having me. My name is Duncan Halai. I work at the World Food Program in Nairobi at the Regional Bureau. I support climate risk insurance in the East and Central Africa region, working across 10 countries in the implementation of the crop and livestock insurance for smallholder farmers, and also incorporating livelihoods and resilience. I'm very happy to be on this discussion to explain what WFP is doing with regards to livestock insurance for pastoralists in the Horn of Africa, mainly focusing on Ethiopia, where WFP has been implementing the satellite index insurance for pastoralists in Ethiopia for the last 4 years. We began as a pilot in 2018 in collaboration with the International Livestock Research Institute. Later on, WFP proceeded to scale up this particular pilot. We started with 2,000 households in 2 riders, but later on we have over the years increased the number of beneficiaries to 28,000 as of 2022 in 11 riders in the Somali region of Ethiopia. The satellite index insurance for pastoralists in the Ethiopia program is implemented in collaboration with the Somali regional government and also a pool of insurance actors, private sector actors in Ethiopia, which is comprises of 4 insurance companies that have also been part of this particular program since the beginning. And how the program components include insurance as the core element that is provided to the 28,000 beneficiaries, but we also incorporate other components including risk reduction and natural resource management, livestock support, financial inclusion and livelihood, which are mainly done in collaboration with other non-governmental actors, as well as through the Productive Safety Net program in Ethiopia, from where we recruit our beneficiaries. We currently have, out of the 28,000 beneficiaries, we have about 50% of them being female, and the rest, the other 50 is male. And so over the years, what has WFP exactly been doing with regards to making sure that this program is up and running? We set up an insurance distribution and payout delivery channel where we've been working with local partners, and apart from the operationalizing of the STIPE program, we also work to ensure that we build the capacity of the local stakeholders to make them understand how to do contract design and product pricing, and also index calculation. and we have the National Meteorological Department as our calculating agent. WFP pays the premiums, but the pool of insurance, as I earlier mentioned, composed of 4 insurance companies, is responsible for insuring this and also reaching out to the reinsurers to reinsure the risk. We also work with a local microfinance institution called the Somali Microfinance Institution, which is responsible for registering or linking the beneficiaries to their account opening to enable them quickly disburse their payouts once the index has triggered a payout.
Benjamin, welcome to the podcast. It's great to have you here, in particular given your key role in the Horn of Africa Drive project, and with ZEPRI taking the regional implementation role for delivering the financial services. It would be great to hear from you as to why a regional approach makes sense and how the financial sector can play a key role in delivering long-term and lasting impact in this region.
The Drive project is managed regionally to ensure scale and sustainability. The regional outlook will be delivered through 2 key levers. The first is risk pooling. Under this lever, ZEPRI PTA Insurance Company, a regional entity, has been identified to develop and share a risk market platform, creating economies of scale and reducing operational costs for the countries. Further, coming together has increased the size of the program and spread. The bigger size and spread will make the program more attractive to insurers, reinsurers, and other providers of financial services. As a result, the beneficiaries are able to get better cover at better price, making the solution economically viable and commercially sustainable. The second lever of the regional approach is enabling quality infrastructure and trade along the livestock trade corridors. The live animals trade is regional, and any improvement in logistics requires cross-border coordination, such as harmonizing standards on livestock and livestock products through mutual recognition agreements and strengthening the capacity of standards agencies to perform quality assurance. Here we are speaking of testing laboratories, traceability systems, quarantine centers, livestock ports, terminals, etc. The private sector in the region will play a critical role in the Drive project by mobilizing and aggregating pastoralist groups into viable business units such as cooperatives, so that these groups can become a reliable supply chain to the meat and milk processing value chains. For example, a reliable supplier to live animals exporters, meat processors such as Kenya Meat Commission in Kenya, eyes and skin processors, etc. As well as making these groups viable markets for the animal feeds and animal husbandry industry. Here I'm thinking of farmers, agrofets, etc. Further, the private sector can play a critical role in providing financial services to these pastoral economies to increase their resilience and improve quality of life. Key examples are access to saving products, access to credit facilities, access to micro insurance products such as hospital cash, etc.
Carol, great to have you on the podcast. Thanks for joining us today. We've talked a little bit today about the importance of last mile delivery and having the right partners in countries to deliver the services required. It would be great to hear from you on how there are some opportunities but also challenges in delivering digital payments in fragile and conflict affected settings. So maybe you can talk a little bit to us about the digital payment paradox. It'd be great if you could give us a couple of examples of the use of digital payments in fragile and conflict affected settings that really save lives.
My name is Karol Karpinski, and I am a financial sector specialist at the World Bank, working on payment systems in FCV situations. There is indeed a paradox when it comes to digital payments and FCV environments. On the one hand, fragility, conflict, and violence are what makes going digital so important there. In normal circumstances, visiting a bank branch to make a payment is just inconvenient. In FCS, it can be deadly, as banks or postal offices can be bombed or attacked by armed groups or terrorists, not to mention assaults on cash-in-transit vehicles. So digital payments are particularly needed when there is fragility and conflict. On the other hand, however, the factors that create the FCV situation in the first place usually also create a shortage of trust. Trust in general, but also trust towards the formal financial sector in particular. Having faced armed conflict, terrorism, coups, and government failure, people and businesses simply do not trust that the balance displayed on their mobile phone necessarily reflects the real value. They might be wondering if they would be able to access it when needed, or whether banks will keep the funds safe. Of course, there are other factors beyond just trust. FCV countries often lack the essential infrastructure, both IT infrastructure such as broadband internet, as well as financial infrastructure such as payment systems. FCV countries also suffer from de-risking. International banks are reluctant to engage with them due to real or perceived AML-CFT risks, which ends up cutting them off the international financial system. The outbreak of the Ebola virus disease in West Africa in 2014 was a tragedy that took lives of more than 11,000 people. It was also a major negative shock for the region's economies. At the time, the disease could only be stopped by deploying thousands of health workers that would help with enforcing quarantine and isolation and educate communities on issues such as safe burial practices. Those newly recruited health workers needed to be paid. Cash would be impractical, slow, and dangerous. Luckily, it turned out that a large share of health workers actually had access to bank accounts. It was therefore very simple to connect healthcare information systems to commercial bank infrastructure and payment systems. For others, the rollout of mobile money was accelerated. That gave the authorities the opportunity to instantly deliver payments to the workers while making the system flexible enough to accommodate future surges in health workers' capacity or bonuses and extra allowances. Another life-saving use case of digital payments is about remittances, domestic and international. Data from Kenya showed us that availability of transfers from friends and family resulted in what's termed consumption smoothing. Residents of rural areas could keep on buying food and agricultural inputs even when the times were bad. Availability of truly real-time payments, though, is a real game changer. Thanks to money transfer companies leveraging instant payment systems at the domestic level and connecting them with one another, money can flow, for example, between the UK and Somalia within seconds. And in Somalia itself, mobile money kept the economy running for years in the absence of a central bank and a formal financial system, offering people a way to send money to one another and pay for their purchases at merchants.
So today we heard how gauging the financial sector's stability and soundness can really pave the way for developing integrated financial sector solutions. And they're needed to address the complex development challenges in the fragile and conflict-affected settings. Taking a specified approach gives us the highest chance of supporting the achievement of a country's broader economic outcomes. And Cedric talked to the role that FSAPs and other diagnostic tools can play in these countries. We also heard how access to financial services can help build resilience and recovery from shocks, including climate shocks, even for those particularly hard to reach communities, such as the pastoralists in the Horn of Africa, and how the World Bank's project under preparation, HOA Drive, is looking to support scale up of access to financial services and better links to markets for those communities. But they're not doing that alone. They're working with a number of partners, and we heard from WFP and we heard from ZEPRI on the importance of the collaborative nature of developing solutions and working with local actors in the private sector to really harness the expertise and build sustainable solutions. And then finally, we heard from Carol on the importance of gaining trust in financial systems. And although that may take time, there are options that exist to leverage and deliver through services such as digital payments in FCV contexts.
This wraps up this episode of the podcast series. Thank you for listening, and please check out our other podcasts. For that, and to learn more about the World Bank Group efforts in environments affected by fragility, conflict, and violence, please visit our website www.worldbank.org/FCV.